What's up, guys? Lunch money time. Friday. Wall Street's trying to get rich. The rest of us trying to get our lunch money right. I'm here with the beautiful, intelligent Polina Marinova, Pompliano, aka Pimp, looking like a traffic cone. No, what is this outfit? Or you look like the NFL when they throw the penalty flag. They're like, penalty. No, that is a violation of the dress code.
I look like a bee.
No, I've never seen a fluorescent yellow bee. Speaking of B, B stands for BlockFi. BlockFi is a sponsor of Lunch Money. You can get 8.6% interest in a interest-bearing account with BlockFi. Go and check it out. BlockFi.com/lunchmoney. I've got money in there. I'm an investor in the company.
Money in the bank.
It is very, very compelling. There's risk. Do your research. Check it out. BlockFi.com/lunchmoney. Okay, to the violation machine. What's going on?
Oh my God, why are you yelling? Okay. So big tech earnings. Yesterday, the Silicon Valley Titans were being grilled by Congress, and their second quarter earnings. Was it second quarter earnings?
Come on.
We're
in the third quarter, so yes, second quarter.
Okay. So Apple blew expectations out of the water. Despite store closures, revenue was up 11%. Google, for the first time as a public company, parent Alphabet reported a drop in sales, which fell 2% from last year as COVID dragged down ad revenue. Amazon spent over $4 billion on safety, PPE, extra cleaning, and all that stuff. Still managed to bring in $5.8 billion in profits. Revenue grew 40% annually. And Facebook also reported a good positive change in revenue, earnings, and user growth, indicating that downturn in ad spending during the pandemic wasn't much of an obstacle.
So Apple has their store closed, but it's still up 11% annually, which is the largest ever increase in the third quarter of the history of the business. Unbelievable. Amazon still made over $5 billion, even though they spent a bunch of money on PPE, on bonuses for employees, all kinds of different things. And so what we end up getting is a situation where the rich get richer and the poor get poorer in terms of companies, right? These are massive tech behemoths, but they're also digitally native. And so it just goes back to the tailwinds. If you bet on the right thing, which is innovation and technology and digitization and all this stuff, as those trends got accelerated by the virus, of course, they're the companies that are going to end up doing well. Compare Apple with their stores being closed to the local electronics store. Apple's crushing compared to them. Why? It is a more innovative, more internet-enabled type business than the local electronics store. You can argue whether that's good or bad, but that's just the facts. And the numbers proved it. Massive numbers yesterday.
You know how yesterday you said that these companies weren't monopolies, they were just large companies? Somebody in the comments asked, okay, what other search tool do you use aside from Google?
The whole key is Microsoft Bing has millions of users, right?
But
Brave is a browser, or DuckDuckGo, millions of users. Again, we don't think of that, but when you look at the actual data, it ends up being that those other services have a lot of users. Now, you have to ask, why is Google the most popular? It's because it's the best one. It undeniably is the best product.
But can you argue that it's not a monopoly?
Of course you can, because there's plenty of other search engines you can use. Now, you may not choose to use them because they're not better, but being a monopoly means that it's winner takes all, not winner take most. Winner take most is not equal to monopoly. Winner takes all.
I don't know about that, but okay.
Well, that's kind of what a monopoly is. A monopoly means one winner.
Chinese Tesla rival XPeng Motors is in talks to raise around $300 million in funding ahead of the initial public offering it's planning in the U.S.
Everybody wants to be electric. Everybody. Nikola is a company that went public, $20 billion valuation, never had a single company produced. These guys,
never had a single company produced.
A single car produced. These guys are trying to raise $300 million. Supposedly, the Qatar Investment Authority is involved. We'll see what happens there. But I don't think that's actually been confirmed yet. That's a rumor. It's going to be really interesting to see how these kind of electric car wars play out. But Tesla's winning so far.
So it's so interesting because Tesla was kind of alone in the game and now it has competition. Do we think something like XPeng Motors can give Tesla a good run for its money?
Well,
Money for its run? Run for its money?
Run for its money. You need a couple of things to be successful in this space. One, you need lots of capital. Creating a car company is incredibly capital intensive. Two is you need really, really deep levels of innovation, right? So that is more of kind of the high tech type thing. And three is you need incredibly repetitive, sustainable, predictable operational efficiency. So you got to have lots of money and have a lot of innovation and then be able to execute. Right, that's essentially what comes down to in these cars. That's pretty easy for me to sit here saying that in my kitchen. It's incredibly difficult to do those three things.
In the kitchen.
XPeng Motors, they raised, I think it was $400 million last November. They then raised $500 million earlier this month, or in July, and they raised it from like big investors, Sequoia China, from Coatue, a bunch of people, right? So they've got a lot of capital. They're not going to raise another 300 million. So right there in, call it the last 8-9 months, they'll have raised over $1 billion in capital. One of the questions is that enough, or do you need even more? And then two is, how innovative are they and how efficient are they from an operational standpoint? Those are questions that remain to be answered.
Do you think that some of these electric car companies, even if they can't beat Tesla on quality, they can undercut it on price?
No.
No, why?
No, technology naturally is a very deflationary force, and you already see it with Tesla. Tesla started out with a high price point, kind of an exotic sports car type feel and very scarce, and they've moved down the value chain in terms of they're producing more cars at lower prices, and a lot of that has to just do with operational efficiency and the deflationary nature of technology. A lot of that is very obvious when you go and you look in their facilities, and they have so much robotics and automation in their production facility. And so Tesla is one example. That doesn't mean that Ford and GM and all these other guys aren't quickly doing the same thing. They absolutely are. But what I think you're going to see is every single car is going to be electric at some point in the future on the street. I wouldn't be surprised if governments mandate that at some point. But where you get two competing forces. You get the incumbents that are realizing, wait, we have to start moving to electric. And then you get upstarts. Tesla is probably the only company that's gone from upstart to like now it's becoming an incumbent, just in terms of
it's so bizarre.
Well, every challenger becomes the man at some point, right? If you're successful. So there was a point where Bill Gates was he was the guy in the garage who was trying to fight against the man, and he was going to disrupt the world and do all this stuff. Now Bill Gates is tens of billions of dollars in net worth, and he's the man. Right. And so every innovator becomes the man if you're successful enough. And I think that's what we're seeing with Tesla is they have gone from there's no chance that company can be successful to now they've got this. Well, now they're the most valuable car company in the world. And so the question is just, can they fulfill those expectations? We'll see. Are you busy on your electronic device on your wrist there?
I got an emergency notification. Okay.
What was the emergency?
Oh, just an email.
Oh, okay. What's going on with Lyft?
So everybody's trying to be a one-stop shop company, and everybody's trying to find a path to profitability. Lyft is no exception. Lyft is expanding its car rental service, which it says will simplify the rental process for customers and help its own path to profitability. This comes at a time when one of the largest American car rental companies, Hertz, filed for bankruptcy. What is Lyft trying to do?
Well, just like Uber claims to be a logistics company, right? So they basically say, look, we started out with moving people to places, but we can move food to places. We can eventually move boxes to places. And there's a transportation or logistics company, right? So it's a marketplace to move things to various places for a customer. Sometimes that customer is people who want to move people. Sometimes it's food, sometimes whatever. Lyft is taking a different approach, but similar in structure, which is Lyft is saying we are a marketplace, but that marketplace is we will connect you to a ride. It may be that you have a driver or that you are the driver, right? So whether you rent the car or you just simply have like a micro rental where somebody's driving you from point A to point B in a short period of time, they're still serving as a marketplace. And ultimately what it comes down to is when you're trying to grow a business that has grown this much so far, You basically start with, let's penetrate one market. So Uber and Lyft did that. Then they expand geographically, domestically. So they expand throughout the United States. They did that. Then they go international, which they've done to some level of success, and in other places they failed. But basically, once you feel like you've tapped out your geographic expansion strategy, you have to look for other lines of products or services to continue to grow. And so how do you do that? Well, that's what you're seeing with Uber Eats. Uber Eats has gone from non-existent to 20+% of revenue now. Lyft is saying, wait, we've got to now expand our product offering. And so this is one thing that they're trying to do.
And they are basically partnering with a German company called Sixt, which will supply the cars. And the partnership will keep the cost of owning and operating a fleet off of Lyft's balance sheet. I think that's smart.
Yeah. I mean, classic example of like, these businesses, right? Uber owns no taxi or owns no cars, yet it's the most valuable transportation company in the world. Airbnb owns no hotels, yet it's the most valuable hospitality company in the world, right? Lyft is basically saying, is there a world where Lyft could actually become the most valuable car rental service and actually own no cars, have no fleets, keep it all off their balance sheet? Possibly. And so it's just an asset light, approach to creating that marketplace. I like it.
All right, moving on.
By the way, I was an investor in Lyft. We made money. It was great.
Why are you gonna? Okay.
Disclaimer.
Hong Kong.
#flex.
Oh my God. Hong Kong's legislative council election was supposed to be on September 6th of this year, but it's going to be postponed because according to Hong Kong law, an election can be postponed if the city's chief executive believes it is likely to be obstructed, disrupted, undermined, or seriously affected by riot or open violence or any danger to public health and safety. That's interesting.
Wow. This is something that I would not have expected to happen in Hong Kong, but there's many places around the world that I could expect this to happen just due to corruption, lack of democracy.
But I feel like that was a great time to vote.
Well, I understand why they're saying what they're saying, but I don't agree that you should be moving elections in general in a democratic space. The other piece of that is obviously in the United States, we have a president who recently hinted at the idea of potentially moving the election, which he does not have the power to do. I'm not going to get into the merits of that. But what I will say is one of the core tenets of democracy in a free world is free and fair elections. And part of that, in my opinion, is the reliability of the election happening when it's supposed to happen.
So, but here's the thing, now that I think about it, I agree with you, but what if there's riots and violence in the streets and I'm a little old lady who wants to go vote, but I can't go through all that violence to get to the voting booth? How do I vote? I feel like that's kind of tough. I don't want to go through tear gas to go vote.
So yes, but the question is, why are there riots and violence? It's because they're rioting against the people, against the power in charge.
Mail in.
We're not going to get into all that. All right, what's going on with BC jail?
All right. So do you guys remember the college cheating scandal that all these people were involved in?
Yeah.
Well,
I could have gotten to Harvard if I knew I could have scandaled my way in.
Scandaled?
That's what they did.
Scandaled your way in? Well, here's my issue with this. All these actresses were plastered all over. Nobody was talking about the business dudes and the VCs who were involved in it, because they were. So venture capitalist Manuel Enriquez, former chairman and CEO of Hercules Capital, paid more than $400,000 in the scheme, and he was just sentenced to 6 months in prison. Is
it just because he participated in it, or did he do something else?
He
paid to boost his daughter's exam scores and get one admitted to a university falsely as a tennis recruit.
Oh, I remember this one.
And he said in a letter to the judge that he was ashamed and acknowledged what he did was wrong, illegal, unfair, and hurtful, especially to the many honest college applicants, students, and parents.
So him and his wife paid money to have their daughters' SAT exams corrected to boost their scores and have one of the daughters admitted to Georgetown University as a purported tennis recruit, even though she did not play competitively.
So he pled guilty in October to one count of conspiracy to commit mail and wire fraud and honest services, mail and wire fraud, and one count of conspiracy to commit money laundering. That's like a pretty big number. Money laundering.
Wait, but why money laundering?
Weird. I don't know. His wife, who has also pleaded guilty, was sentenced to 7 months in prison March. So both the husband and the wife went to jail, are going to jail for 6 and 7 months.
To prison.
Prison. And then prosecutors acknowledged in court documents that he was a less active participant in the mechanism and mechanics of the fraud than his wife.
Wow.
Which is pretty wild.
How do you correct SAT scores?
I have no clue, but I mean, look, is this stuff wrong? Absolutely. Did a lot of people do this over the years? Absolutely. What's the difference? I mean, well, there is a difference, but there's a slippery slope here of somebody paying to have their child admitted under the tennis program and then not be a tennis player, or somebody just donating to the university and their kid who might not have gotten accepted otherwise getting accepted.
Another thing,
one is a legal form of doing this, the other is an illegal form. So there's a difference.
Another legal form that I don't appreciate is it's kind of like an open secret, but when you're applying to college, there's a little box that says, are you a legacy student? Basically, has your sister, brother, sibling, parent, grandparent attended the university of whatever? And you check it, and it's known that you probably have a higher likelihood of getting in. If
I don't have a problem with that as much.
Really? I do. Why do you not have a problem with that?
Only because that is a fundraising situation where think of it as somebody comes to your university, right? And they go on and they leave. You want to help your alumni, right? And you want them to be successful. Hold on. You want them to be successful and kind of do all these things. And so you can also think of it as, remember, colleges are businesses, right? And so there's a very similar business model where I may say to Polina in business, hey, it's $100 a year, but if you go and you recruit more people to come to our, to come use our product,
it's like a cult.
Well, you either get a discount or they get a discount or whatever. And I think of my marketing dollars being spread across multiple customers, so I can bring my cost of acquisition down and my lifetime value goes up.
I just don't like it that because I was born in a different country and I don't have any legacy people who went to the University of Georgia. Like,
yeah, but my point being that, like, I'm not saying necessarily like that's an awesome idea or anything like that. I'm just saying, like, I have much less of a problem with the idea of if you're a brother or mother or whoever went somewhere and the university wants to offer that as a benefit to the alumni that, hey, your family can come here. That to me that to me is not unethical or illegal.
You just said it's a business. So why, if I donate money, why should I not expect to get in? I just donated some money.
Again, I don't think that is unethical or illegal. I just don't like the idea of donating, right? It's basically saying there are parents who are going to take money and they're going to spend that money. Some figured out how to do it legally by making a donation and then their kid gets in, versus somebody who says, I'm going to pay to do this. Like, there's a big thing that I would say of, like, actually you could look at the people who did the scandal and be like, hey, I mean, why didn't you just donate to the school and do it the legal way?
I just don't understand the altering of the SAT scores, because that has nothing to do with the individual colleges. There's an SAT board. So did you bribe how do you correct SAT
Well, they might have sent somebody to take the test for them. There could have been somebody who, we don't know all the details.
Wait, by the way, sorry, just time out. I match exactly the words at the bottom.
Oh, okay. That's great to know. Okay. I appreciate that fact. But no, I think the other piece of this too is there's a much bigger trend here, which is like, this is all not going to matter in 25 years. Like, college is not going to be a thing. And it's because of
people are always going to find ways to cheat.
Well, look, by the way, I want everyone to get an education, right? And I don't like the idea that people can just spend money and then they get like a leg up in life. But just because we don't like it, but that's how the world works. And so literally, if you have more money, you tend to be healthier. You tend to be safer. You tend to, do all these kind of things. Yeah. Is that how the world should work? Probably not. But is that how the world does work? Yes. And it's just, money is a resource. And if you have resources, then you're able to get access to things. Education being one of them. But I do think that technology, again, deflationary trend is today, you can go right now on YouTube and you can type in MIT open course, and you will literally be able to sit in an MIT course and learn exactly what the students in that class are learning for free.
CS50, David Malin.
Right, at Harvard. And there's multiple universities now putting out a lot of this stuff. Now, yes, I understand that a lot of it is the introductory type stuff. Yes, I understand there's a difference between going in person versus, sitting at home and having to be a self-starter. I get all of it. My point being that we're seeing the early signs of online education. There is going to be a complete trend shift where it's not going to be worth going to school in the traditional sense when you can learn everything online. And I always tell people, why go to a second or third tier school when you can learn from the best people in the world online?
He learns a lot from YouTube.
Yeah, like I would tell me a industry that you want to be an expert in, and I will literally go find the top 20 people in that industry probably have podcasts, videos, they've written a bunch of stuff, all that stuff. You will learn more doing that, because in the education system, if you want to learn about, let's say, history, we don't tell you just go read the 5 best history books. Instead, we have a professor who, frankly, is probably not the best, expert on history, but is somewhat informed, stand up there and they teach the class.
I still remember there was some obscure thing around Bitcoin or blockchain or something like that. And he literally spent a day with his headphones on, like reading and watching things and listening to things. I was like, oh my God. But then by the end of the day, you were like,
yeah, I just taught myself.
Interesting.
The information's out there. You just gotta care. Just gotta want to be smart.
All right.
Like me, read
We're
the
out
internet.
of time, but Lunch Money Live. Do you want to tell the people?
Bang, bang. Tomorrow, 12 noon Eastern. Saturday, 12 noon Eastern. Me and my compadre here, my partner in crime.
Compadre.
We will go live on YouTube. So pay attention. Make sure you're subscribed to the channel. We're going to go live. I don't know for how long. Maybe we'll order some Domino's while we do it. And we're just going to answer questions. Whatever you guys want to talk about. Saturday, 12 noon Eastern, live.
But see you there. Do not call me Pimp. Do not call me Pimp.
Okay.
All right. Are you ready for my joke?
Yeah, let's hear it.
What do you call a cow? I have a lot of cows lately. What do you call a cow in an earthquake?
Moving.
No, you said that last time.
What?
A milkshake. Okay.
But never mind. Because is it really milk before it comes out of the cow?
What?
The cow creates the milk.
Right.
So at what point does it go from the ingredients that make the milk inside the cow to actually milk? There you go. That's the type of stuff I think about. I would go Google that right now, and then I would know, how does the cow make milk? Got to learn on the internet, read. That's it for Lunch Money today. Well, while she's trying to get rich, the rest of us is trying to get her lunch money right. Polina looks like a penalty flag in the NFL. Woo-hoo. We'll see you guys tomorrow at 12 noon Eastern.
Bang, bang. Hope you guys enjoyed this episode of Lunch Money as much as we did.
And don't forget, Lunch Money is now sponsored by BlockFi, so go check them out. There's a link in the description that you can click on. I'm an investor, a user, and a huge fan. What?
You're a bigger fan of BlockFi than you are of me?
BlockFi is my second favorite thing in the world behind Polina. They've got 3 products. They can give you a US dollar loan. You can earn up to 8.6% interest on an interest-bearing account, or you can buy and sell cryptocurrencies on their crypto exchange. I personally use the interest-bearing account. There's not very many places where you'll find up to 8.6% interest on a deposit in an interest-bearing account. Go do your own research. There's risk associated, but 8.6% is pretty compelling. So click on the link in the description. Say thanks to the folks at BlockFi. Subscribe to our channel. Like the video. Annoy Polina in the comments. And we'll see you guys tomorrow.
And be kind to your friends.